Today, we're going to talk about why Protolabs stock plunged around 31% during the last trading session. And before we get into that, I wanted to talk a little bit about buying and selling stocks. So buying stocks is quite easy. Identify something you feel strongly about. Hopefully, you'll dollar cost average into a position over time. That helps reduce market timing risk. And then if the stock falls, then you consult the Ministry of Truth. Here on the right, you can see everybody asking, why is the stock dropping, falling, crashing? Very few are asking why a stock goes up, because people expect that their investing acumen is solid and whatever stock they choose will go up. That's why they invested in it. Now, capturing alpha is a lot more difficult than buying a stock. So when you sell a stock, and we can argue about whether or not paper losses are actual losses, but when you sell a stock, losses are definitely realized, and you can either sell winners, that would be stocks that are greater than your current cost basis, or you can sell losers, and those would be stocks that are less than your cost basis at the current price. So when we look at reasons to sell winners, that's when you take profits. And for example, we have a weighting rule in our own portfolio that says once a stock becomes, let's say, 10% or higher, the weighting of the overall portfolio, then we'll start trimming it. And we used that rule in summer of last year to realize, I think, 7 times our cost basis on NVIDIA in that period of time alone. I think we trimmed for about 2 months. Then there's obvious hype. So we saw gene editing stocks undergo a significant move upwards together. And whenever a group of stocks that's related in terms of the theme moves together, then that's a good sign that there's hype. And we trimmed there. I think we recovered quite a bit, at least half of our cost basis across all our positions. And then there's reasons to sell both winners and losers, and that's when your thesis changes. So for example, Alibaba, we sold that somewhere around the peak, fortunately. That was our largest position at the time. Our thesis changed because we learned about just how risky VI structures are. And then there can be cases where you're forced to exit, for example, an M&A activity. So Blue Prism was acquired by a private equity firm, and we exited our position accordingly. And then there's the case when growth stalls. Now, on the right-hand side here, I've pointed out 3 stocks that we've sold over time. And in each of these cases, following our decision to sell, these stock prices plummeted. Now, of course, we have to wait to see what the final outcome is before we start patting ourselves on the back. So tech stocks are notoriously volatile, and there's nothing that says these firms won't recover. However, we believe that in all cases, these aren't stocks that we're willing to hold for some of the reasons that we've provided here. So when we look at Protolabs, so they had their recent earnings call. That was why the share price plummeted, and they actually met expectations. Here you can see their outlook. That's usually at the end of their investor decks for the following quarter. They were forecasting at least 121. Well, they realized that a little bit over. And then earnings per share, you can see they hit that guidance as well. So they met expectations, but the problem was that there were a number of takeaways in this presentation, in particular the earnings call, that were red flags. So we had already written a piece, I think this was not too long ago, on Protolabs and Exometry, talking about how we weren't quite sure Protolabs was realizing the sort of revenue growth that we expected. Let me rephrase that and say they're definitely not. The question is, do we sell the stock because they've stopped growing? And in this earnings call, they talk a little bit about those underperforming expectations for injection molding. You can see here that's nearly half of all their revenues, and it produces the highest volume of parts per run. So it has very high margins, and that's dinging them when it comes to the profitability of the firm. And that's a concern that analysts are looking at. And when they talked about Q3 2022 earnings, they made this comment that they wanted to shift away from talking about performance and take a few moments to reflect on the impact their business has on society. We really don't care. We're interested to know if they're going to be resuming growth. And here you can see this is taken from their latest investor deck, which is singing a completely different tune from the one that we looked at when we invested in this firm. Now they're starting to talk about impact and things like that, just really a fluff that draws attention away from the fact that they can't grow revenues. And we had sent that firm a email here. This was in September, and just asked them to comment if they could in the coming earnings call on their $1 billion by 2026 goal that they had set. And we were hanging our hat on that particular goal over the years. And in that new investor deck, it's nowhere to be seen. So there's your answer. That new investor deck went up just days ago. And that is no longer apparently a goal for the firm. And that's quite upsetting, to be honest, because that's what we were counting on. And in the analyst call, there were a number of questions raised that I wanted to point out, which were quite good. One individual said, "What makes you confident that this is macro headwinds versus," and I underline this because of the terminology they're using here, additional competitive share loss, implying that there's already been erosion from perhaps firms like Exometry, which has been growing revenues like mad in the face of macroeconomic headwinds. And they're reporting, I think, next week. So we'll see how that's going, but they've been doing quite well. The response from Protolabs as well. We talk to our customers and projects are on hold and budgets are used up. Well, that doesn't sound very reassuring. And this other comment here is quite telling. The analyst talks about how injection molding has been a lot less impacted by macro weaknesses in historical years. And that Protolabs has always talked about that as being a very defensible in nature business. And the response from the company is that, well, we're taking very aggressive sales actions, following up on opportunities, calling in every quote, actively engaging customers. You shouldn't have to convince them to use the solution. And when we look at this last bullet point, this was taken right out of their earnings call. They say, when we see times of big supply chain shocks, we do very well because of our ability to be responsive. Well, we're waiting for that to happen because it doesn't appear to be happening. They talk about weakness in auto and healthcare outside of just COVID. That's something to note. And I also wanted to point out in their new investor deck, this slide, which is really taking the piss. It's a trailing 12-month green bar there where they're trying to imply that they're growing revenues. Well, based on the midpoint of their new revised guidance, they're coming in at around 484, so slightly less than 2021 revenues are expected for 2022. So don't try to sell us on the fact that you're growing revenues when in fact you're not. That's kind of cheeky. And then when we look at the outlook for next quarter, this is that midpoint that I talked about, and we plug that into their annual revenues. You can see that over the last 4 years, their revenues have stagnated. And the question is, how long do we want to wait for revenue growth to resume? And there's a number of possible outcomes here. They could get acquired. That's all speculation. Growth could resume, but we've been waiting a long time now for growth to resume, and it's certainly not on track to hit the $1 billion by 2026 that we were looking for. The stock keeps falling. That can certainly happen. It has a simple valuation ratio of 1.4, so it's already quite cheap, and it can just potentially stagnate. But regardless of what happens, we always need to act with conviction and not look back. So just to conclude, we think management is really taking the piss here. They've lost any mention of the $1 billion by 2026. Haven't even addressed that. Just let the goal disappear. They're shifting their language now towards impact versus growth. Deceptive metrics hide their failure to grow. And we're getting mixed messages. They talk about how supply chain issues are a good thing for the company, but that's not apparent in revenue growth. Wall Street doesn't see this as a growth stock, and neither do we. And the question is, has growth stalled enough to sell the stock? Well, that's something that premium subscribers will be privy to. But please leave your comments in the comment section. Make sure to subscribe to our channel. Thanks for taking the time to watch this video today.